I've got a very special guest, and all of us, in fact, look forward to hearing views from Mr. Vallabh Bansali when it comes to market, economy, and his view on the world. Mr. Bansali, always a pleasure to have you on ET now, and I'm glad, sir, doesn't matter where markets are, the warmth and the smile on your face is always intact.
I think it's an extraordinary day where we are reminded that we need to learn all the time. Markets and democracies are beyond any one person. And I think this is a great success of in the Indian story. Indian democracy means a lot to the world. A lot of questions were being raised about our democracy, and they have all been proven wrong. Now, what does that mean? Is it just a political statement that I'm making? No. I think capitalism and democracy are closely linked. And the risks and endemic in a market reflect in the democratic process. And therefore, it's good to be reminded that if you get euphoric, if you take future for granted, whether in business or in politics, that's not wisdom. And I think that is playing out. Having said that, the long-term trend of Indian economy, I do not think is here to change. The most important development in the last few years, or last couple of years maybe, was the trend in investment cycle. As long as that investment cycle does not get dented, I think the Indian story will continue. Political uncertainty, compared to the certainty that we had, may set in, but it still looks like that the old government will come back with a smaller majority. But who am I to really, predict that? Uh, Therefore, I feel pretty happy that our democracy is winning, and which is very good news for capitalism.
Mr. Bansali, okay, let's look at what the numbers currently are. And like you said, the numbers currently are indicating that the current government will come back to power. Now, if that has to happen, then do you think in hindsight, when we look at today's market reaction, will that be called as a panic reaction?
Indeed, because we had a euphoric correct reaction yesterday. And panic follows euphoria is well established. So I think that's okay. I mean, we had gone crazy yesterday, and without the results, so that's okay.
There is a change, and I'm again, sir.
So that is not real panic. I think panic would be 10% down from here or 5% down from here. That would be panic. So this is just a correction of what happened yesterday by and large of the last 2 days.
The 1 month graph here for the Nifty and for the Bank Nifty, and I just want to bring this point what Mr. Bansali is bringing out for the benefit of our viewers, that what have we lost in last 1 month. Today it almost looks like a financial Armageddon, reminds us of the gut-wrenching fall what we had post-COVID or what we've had in instances of 2008. But if you look at the 1 month change, after today's amplified loss also, the correction is actually 4%. So are markets really reacting to the disappointment of exit poll? Maybe the answer to that is yes. My next question, Mr. Bansali, is that if the current government does not come to power, are markets prepared for it, or it could lead to more downside?
I don't think markets are prepared for that situation because that situation is far from clear. That what is the alternative? Who is the prime minister? What will be the policy bias? A lot of things have been said in the election campaign. Some of them are extremely scary for capitalism or even our constitution. And therefore, I think that has not really dawned on the market. The market is reacting, trying to correct from its euphoric state. So, alternative to this government, I think is still not got baked in. And if I've seen the governments in the past, that every government that comes in wants to do good for the country in its own way. What actually happens is a different matter. So the intent will be there, effort will be there, but the policy, execution, all of those things have to be evaluated. And after 10 years of one government, one cannot say that that will be very predictable. That would not be easy to say.
That more than the reaction to the current election tally, this was an accident waiting to happen because market valuations had become bloated, whatever may be the reason, the accident was waiting to happen?
In a way, yes, because for several time market was, doing only one thing, all-time high and higher and higher. And so the earnings momentum that we had seen, some of it was due. Some of it was correction from the COVID years. And some of it um, was predicated on, investments continuing and becoming profitable too soon. So I think there was a bit of overvaluation. Considering the long-term potential of Indian economy, one could feel justified, but there was never a case for buying for the last several months. There was always a case only for hold at best.
Mr. Bansali, the market post-COVID is enjoying what could be called as a clear leadership, whether it is in PSUs, defense, manufacturing, a lot of policy-dominated stocks. And as a result, policy, capex, PSU, these stocks have seen a grand surge in terms of P multiple and also in terms of the market cap. Do you think the party could come to an end in that end of the market?
So I think the valuations, as I said, that will depend upon the overall market trend, which will depend upon the overall policy thrust. But I think that some of the good measures, whether it was pushing the defense exports, some of it was opening up to private sector, they thrust on R&D, thrust on a product, what we call product nation, etc. I don't think that will change. What will change is, well, those who will come to power on populist agenda, what they do on that front. And therefore, what that does do to the character of our public, our fiscal deficit, etc., what it does to the interest rates, those will be bigger macro questions that will come into play. Immediate policy actions or other, executive actions on whether it is defense or whether it is trying to push the economy, that may not change. The overall macro picture within which these were operating, there will be some uncertainty about it.
I'd like to draw your attention to banks, Mr. Bansali. And frankly, banks are on the butcher block, so to speak, if I may use that word loosely. Do you think the selling in banks is slightly unfair? Because for banks, irrespective of what the government is, I mean, the banking sector per se is in a good shape.
Indeed, it is in good shape. But if the investment cycle, for whatever reason, takes a hit, then credit expansion and a lot of those aspects of banking come into, some kind of uncertainty. Similarly, cost of capital, if our fiscal deficit starts going up because of populism, that's another big threat to, interest rate trend, which is another factor for banking. So the robustness of banking is one part, but credit expansion, directed credit to certain sectors, etc., which are part of policy thrust of a government, those will be uncertainties. So from robustness, yes, trend point of view, there will be some uncertainty in banks.
Now we are reaching what could be called as the scary part, because what we are not even 600-700 points away from a lower circuit, which looked almost unimaginable. Mr. Bansali, I've had the pleasure of tracking markets with you, sir, and this reminds me of 2003, what happened. And we know that what happened after that. There was pain and there was a lot of, challenge for the financial markets when the change, when markets fell 10% in 2003. I'm not saying we're reaching there yet, sir, but it is a polite reminder of what markets can actually do.
So I think as long as you remain bottoms up, it doesn't matter what the changes are. You will always find opportunities. So just as we have seen over the last 2-3 days, that when the market becomes too euphoric, be very careful. When the market becomes too fearful, be greedy, look for ideas. And so the Indian story is, I think, here to stay. Indian story will do well on the whole, but it slows down from time to time. So those things will have to be baked in, and therefore it depends upon what is your portfolio made of. And to expect that, year on year, you will make 15-20% returns forever, which is not correct for particularly large portfolios. So I think the mutual fund trends may take a dip in terms of SIP becoming slow, but will SIP reverse? I don't think SIPs will reverse. Will SIP contributions flowing month on month may slow down? They may slow down. So things like that will happen. Now, whether a new government besides the NDA, if it all gets formed, at this point of time, that probability seems low, but who knows? And we see a total populism thrust, then I think it will slow down for a bit, but it will self-correcting because I don't think Indian economy, Indian people are here ready to accept populism of the old kind, of the Garibi Hatao of the 70s and the 80s kind of populism. So I see some kind of swing, some kind of slowdown, but the long-term story is intact.
Bansali, today we don't talk about COVID. What happened during COVID was even uglier in terms of the absolute market carnage because markets have moved on and that's how markets always move. So a year from now, 6 months from now, when we would be discussing 4th July 2004, do you think it would be the biggest buying opportunity of a lifetime?
As I said earlier, prices are not low. They have corrected. And therefore, I would not see that these are, crying buying opportunities. There is uncertainty. So there's no wisdom. You want to be speculative and you want to do something, that's not me. So I would want to see the policy thrust, where it is, whether NDA or whether, because NDA may also, have to function under, more partnership approach and what that is. An alternative government will be hugely partnership driven, likely potentially some kind of populism driven. So with all of that, only where prices have corrected seriously, I would want to buy.
Mr. Bansali, I'll just wrap it up with one more question, sir. So as a monitorable now, what are the 2 or 3 things which you would say would be on your radar in terms of a policy monitorable or a key monitorable for next couple of months, which will give you a sense of policy, direction and the mandate?
So I would think that stability of the government, that would be the most important thing. That can one see next 5 years government remaining stable? That's number one. Number two, what is the quotient of populism? Number three, less unlikely, but who knows, that reversal of some of this, nation building approach towards more modern economy, more innovation led economy. Like we had this huge public, digitalization. We had huge thrust on defense, huge thrust on infrastructure. If some of those things get reversed, which is the last item on my agenda, but I would look out for all these 3 things.
Bansali, really, really grateful that you could find time on a day like this, join us and, share your words of wisdom with our viewers. Thank you very much. Mr. Bansali clearly seems to be.
If you like this video, then like, share and subscribe to ET Now.